Oil prices have stabilized after falling over the weekend due to fears that the global economy is heading for a recession. Brent crude is currently at around $113 a barrel. Now, for the most of last week, the commodity was trading at around $120. Investors are increasingly worried that major economies like China, the US, and Europe are in a slump, which means they'll buy less oil. At the moment, that's outweighing concerns over tight supply levels linked to sanctions on Russia. The country is one of the world's leading exporters of crude, but it's the subject of boycotts by the US and Europe due to Moscow's operation in Ukraine. To offset that lost business, Russia has turned to China, which bought 55% more crude from its neighbor in May. Meanwhile, Germany says it's restarting coal power plants to deal with a shortage of natural gas, which Europe's largest economy also gets from Russia. Now, for more on the story, let's go to Han Tan, Chief Market Analyst at the Exinity Group in Abu Dhabi. Welcome back to the program, Han. Now, looking first at fears over a recession in the global economy, we heard from U.S. Treasury Secretary Janet Yellen. She said a recession in the U.S. at least is not inevitable for now, despite signs that the world's largest economy is slowing. Now, from what you're seeing in the numbers, what do you expect for the global economy?
Right. So it's still early days. If you look at the hard economic data, you do still see some relative resilience in the U.S. economy. For example, China is reopening up as well, but it's the forecasts. Those are fearing a recession, right? So if you look at the inversions in a couple of parts of the yield curve, say between the 5 and 30-year, for example, right? That's the market's way of showing those fears of a recession. And of course, we have that sell-off in equities and other risk assets as well. So while the Fed and perhaps Yellen as well can think that the U.S. economy can avoid a recession, I think markets are fearing otherwise.
Now, yeah, so because of those forecasts, investors increasingly fearful that there will be less demand for oil, and that's driving prices lower. So when we look at the other side, are there any supply side developments that are keeping oil prices down, or at least from going up to the much more elevated levels that they were at earlier in the year?
Yeah, and I think one of those factors were what you had highlighted to your viewers just moments ago, right? There are signs that Russian supplies are appearing to be more resilient than expected. As you mentioned, China buying up record amounts as they reopen. But I think overall, what the markets are telling us is that it's still tight. There are still backwardation in the structures, meaning markets are paying a premium to try and get their hands on oil now rather than later. So with that resilience in the global demand recovery, I think we find ourselves in a pretty supportive environment for oil prices overall.
Now, if and when we do sink into a recession, how different is this crisis going to be from what we've seen recently, particularly the recession that we were plunged into because of COVID, and looking farther back, the 2008 global financial crisis?
Yeah, and now for the record, I'm not an economist, but I think from my point of view, this will clearly be different in the sense that this recession, if it happens, for example, won't stem from an abrupt shutdown from lockdowns a la COVID. It also perhaps may not stem from a systemic risk in the financial system a la 2008, right? So this will be more of a 1980s style recession. You've got the Fed that is very eager to expeditiously hike interest rates to destroy some of that demand, to bring consumer prices to a more stable footing. And perhaps another big concern for the markets is that the Fed will not be around this time to come to the market's rescue. So that will dominate market sentiment as we go into 2023 and beyond.